This conference will now be recorded.
All right. So in the yesterday's session, we were talking about asset accounting, certain basic points. Now let us talk about depreciation calculation methods in fixed assets accounting. Let me put depreciation calculation methods. So we discussed yesterday that there will be three depreciation calculation methods. First one is your straight line method. Second one is your declining balance method. Third one is your useful life method. These are the three depreciation methods or calculation ways that we have in your asset accounting. Before you get into SAP, before you try to set up your asset accounting in SAP, you must understand how depreciation is calculated for an asset. Now, whether your client wants to use straight line method or declining balance method or useful life method is dependent on the accounting principle that they're adopting. If you are considering India, in India, according to Indian Companies Act, we are not going to use depreciation based on the percentage. Depreciation is used based on the useful life. Let's say if you are working for any Indian project, if you are showing any Indian client in your resume, they might ask you how your depreciation keys were created or how did you configure depreciation methods. So if you are telling that we used 10% straight line method, 15% WDV method, you are wrong, because in India, depreciation is not calculated based on percentage. It is calculated based on the useful life. So since this is a localization country specific requirement, first we need to gather which projects we are currently working and which projects we are showing in our resume. Accordingly, you have to gather certain information about the depreciation calculation logics. Okay, even if you are able to explain the total configuration, but because you are telling the way depreciation is calculated in India incorrectly, whatever the efforts you have put in are gone. Just because of one wrong answer, that depreciation is calculated in a wrong way in India. So that shows whether you really worked or not. So in India, we will be using useful life method. Similarly, whatever the projects you are going to project in your resume, accordingly you have to understand if this is percentage basis. Be very sure whether this is a straight line method or declining balance method. If it is useful life method, straightforward useful life method. And in each of these methods, how depreciation calculation works, you have to understand. In short, if you have pen, paper, calculator and asset value date, asset purchase date, asset value and a key date. For this date, what is the value of the asset? You must be in a position to compute the numbers manually without having any system in front of you. And whatever the calculations you are going to do on the Excel sheet or manual calculator, if you put the same transaction, if you put the same scenario on SAP, you are supposed to get exactly the same number including decimal. So you'll have to understand asset accounting calculation that accurately. Only then it is possible for us to understand, tackle any situations, any issues in asset accounting. Because it's a pure numbering game, your asset accounting. Okay, if you are good at basic percentage or plus minus calculations, you are good at asset accounting. Configuration is nothing in asset accounting. It is very straightforward. Let's say if we talk about a straight line method, if we talk about declining balance method, useful life method, we will try to calculate depreciation in each of these methods for the same asset value for the same asset date. Please be on mute if you are not talking. So I'll take example, asset purchased on 10th February 2021. Asset purchased on 10th February 2021 for, let's say, I'll take round figures for easy calculations, 1 lakh. Asset purchased on 10th February 2021 for 1 lakh. This is your asset transaction that took place in 2021. Now you'll have to consider your asset calculations as on current date, which is 3rd May 2023. Considering this, make sure whether we are able to compute the asset figures properly or not. So if I take this example, first scenario, if I take straight line method, 10%. First method I am going to take straight line method 10%. First of all, you have to put your current fiscal year. So let me put current fiscal year is 2023. We are in currently 2023 fiscal year and your purchase is in 2021. I'll put purchase fiscal year is 2021. Now if you purchased in 2021, you have used the asset in 2021, you have used asset in 2022, you are currently in 2023. Now your asset is 2-year certain months, your asset is 3rd year running. So you have to understand in which year you purchased asset, currently in your which year. Accordingly you will understand the life of the asset. Currently 2021 first year is completed, 2022 second year is completed, 2023 we are currently in 3rd year. So what I am going to do, if I have to calculate depreciation using straight line method 10%, according to straight line method, in straight line method, depreciation remains constant or fixed every year. Right? In straight line method, your depreciation will remain constant or it will remain fixed every year. Now, one more point that we have to understand, depreciation is always calculated for the year and posted monthly. Okay, you are always going to calculate the depreciation per year or for the year. For 1 year, you are going to calculate the depreciation and the posting will take place on a monthly basis because your depreciation will have a P&L impact. Depreciation will have P&L impact. Okay, your depreciation will have P&L impact. Since it has got a P&L impact, you are supposed to show or you are supposed to charge depreciation to your profit and loss account on a monthly basis. Whatever the yearly depreciation you are calculating, this yearly depreciation you will convert into monthly depreciation based on two logics. So yearly depreciation will be converted to monthly depreciation based on two ways. So option number 1, based on number of months in a year. Option number 2, based on number of days in a year. Okay, when I want to convert my yearly depreciation into monthly depreciation, I'll be having two options. Option number 1, I'll be converting based on number of months. Option number 2, I will be converting based on number of days. If I take this based on number of months, I'll be taking depreciation amount divided by 12. Okay, whatever the depreciation amount you are getting, this depreciation amount or depreciation amount per year divided by 12. On the other side, based on a number of days, it will be depreciation amount per year divided by, I'll say 365 divided by number of days in a month. Number of days in a month. If you are calculating for January, you will be depreciation amount divided by 365 days. This is multiplied, not divided by, into number of days in a month. This is the two method that we are going to use for converting yearly depreciation into monthly depreciation. These are all standard things used across all the organizations, irrespective of whether they are using SAP or not using SAP. Even if you come to SAP, the same points are applicable in SAP. Okay. Now let's try to understand how this depreciation is calculated. Straight line method, 10%. I will take this down. So straight line method depreciation is equal to asset purchase value. This asset purchase value we call it as APC in SAP into depreciation percentage. Now in our example, we are assuming that we purchased asset for 1 lakh. 1 lakh will become your asset value. So here I'll put 1 lakh multiplied by our depreciation percentage is 10%. I'll put 10%. This is what you are going to do to get the yearly depreciation. Now what we will get here, depreciation per year is equal to 1 lakh into 10% will be 10,000. This is 10,000. This will be your yearly depreciation. Now here I'll have to write years. I'll put year. I'll put depreciation per annum. I'll put depreciation per month. Now here we purchased the asset in 2021. I'll put 2021. 2022. We are currently in 2023. Put until 2023. Once you put until 2023, first come here in 2021, in which the year in which we actually purchased this asset. Now you have to start calculating based on your fiscal year. You have to keep your fiscal year in your mind. If you are calculating this depreciation according to leading ledger or according to non-leading ledger. According to leading ledger, you may have a different fiscal year. According to non-leading ledger, you may have a different fiscal year. In short, for our example, for our scenario, for leading ledger, we are using Jan to December. For non-leading ledger, we are using April to March. So the amount of depreciation that you are going to calculate depends based on which accounting principle you are considering. So you'll have to keep different things in your mind before you calculate figures on your SAP system. It is not that straight away 1 lakh into 10% to 10,000, we may be going wrong. Right? Unless you are clear with the scenario, you'll have to put all the small points in your mind. Only then you will be at exact requirement. You will be able to derive at the proper depreciation calculations. For this example, I am going to consider fiscal year as Jan to December. Okay, this is the assumption we are going ahead with. We are going ahead with the assumption of fiscal year is Jan to December. Now, according to Jan to December fiscal year, if you consider the asset purchase date, which is 10th February, did we use the asset for the complete year in 2021 or we have partially used?
Partially.
In 2021, we have partially used this asset because we did not purchase on the fiscal year start date, which is January 1st. So depreciation per annum, or I'll put one more point here. Usage. I'll put here partial. This year we have used full. This year again it is partial. Because you are still on March month, you are not sure whether you are going to use this asset till December, till year end, or you may sell the asset may get damaged, anything might happen till the year end. So as on current date only you have to consider while you are calculating the depreciation. So when I say partial, first I am going to write depreciation per year. When I try to put depreciation per year, for the first year I am going to put 10,000. Second year also I am going to put 10,000. Third year also I am going to put 10,000. This is because according to straight line method, every year your depreciation remains fixed. Considering this fact, considering this logic, I am going to put 10,000 per month, 10,000 per year for all the fiscal years that I am using the asset. But wherever my asset is partially used, my per month depreciation will differ. Wherever I have used fully, my per month depreciation will differ. Wherever I have used partially, my per month depreciation will differ. How this is going to differ, you have to practically understand. Okay. Now, this is your per annum depreciation. Now, when you talk about per month depreciation, you'll have to put per month depreciation according to these years. So what I'm going to put instead of this, let me put this table in a different way. I'll put these years. (2021), 2022, 2023. Scenario 1, straight line method. Okay, I'll put Jan, Feb until December, let me put. Now, in 2021, let me put usage. This is partial, this is full, this is partial. Is this what we have put? Okay. Next one, let me put depreciation per annum is your 10,000, 10,000, 10,000. Now let me put this in a different color. Now, first of all, is this clear for everybody why we got this 10,000? Right, I'll put 1 lakh into 10 percentage. Okay, straight line method, you have got 10,000. For every year, I've put depreciation per annum as 10,000, 10,000, 10,000. But when I have decided that in 2021 my asset was used partially, I am not supposed to charge the total 10,000 depreciation per year. I am going to charge this 10,000 according to the number of days that I have used this asset, or according to the number of months that I have used this asset. So we assumed that there are two ways. Option number one, you will go ahead with number of months. Option number 2, you will go ahead with number of days. In reality, most of the clients will prefer based on number of days instead of based on number of months. So we will be calculating our figures based on number of days method, because this is what is used in your real environment in most of the clients. Here what I am going to do, I am going to write number of days here. Let me put days also here. January 31 days, February 28 days. Okay, now here you'll have to consider 28 days or 29 days, depends on the year. If it is a leap year or non-leap year, you'll have to consider. Otherwise, what you can do, you can take 29 here. Simply I'm taking 28 here, 31, 30, 31, 30, 31, 31, and this will be 30 here, 31 here, 30 here, 31 here. These are your number of days in each month. Now we need to calculate depreciation per month here. According to this, your asset purchase date was purchase date 10 Feb 2021. Considering this date, did we use the asset in the month of January or not? Did we use the asset in January 2021? No. So I'll put blank here. There is no asset in this month. When there is no asset, there is no depreciation. In the month of February, did we use the asset?
Yes.
Yes. We have used. We have used from when? From 10th onwards. Right? You have used from 10th onwards. So you have to count from 10th until 28. From 10 to 28, how many days you will get?
18.
18 days.
19.
90. 10 also.
I'll put 10 to 28. So it will be 19 days. Correct? We have used 19 days in this month. Am I correct? Currently I am considering only 2021. Focus only on 2021. Okay, 2021. You have used 19 days. Here I am not putting anything because there is no asset in the month of January. February we have used for 19 days, and March onwards asset is there. Till 2023 asset is there means from March onwards you are using asset every day in every month. Correct? So this is full utilization in each month. Now here you need to perform two things. Asset and depreciation. Point number 1 per year. Point number 2 per month. Point number 3 per day. You will be calculating based on the same sequence. First you will calculate per year, then you will come to per month, then you will come to per day. Per year will be 1 lakh multiplied by 10%. Is this correct? 10,000. Yes, no? This is correct. Now per month will be your yearly depreciation, which is 10,000 divided by 12. So if I put 10,000 divided by 12, this will be my per month depreciation. This is my per month depreciation. If I calculate per day depreciation, this is your again per year depreciation divided by number of days, 365 or 366. Now here it will be this divided by 365. Clear with these three numbers? Right, first you are going to calculate per year. Based on per year depreciation, you are going to calculate per month, and based on per month, you are going to calculate per day. So that whatever is your requirement, it will be easy for you to do simple calculations. This is the first fundamental thing that you have to calculate when you purchase any asset and when you know the rate of depreciation. Once you have this information readily available with you, this is just less than a minute activity for you to calculate on your Excel sheet. Here you come to January month, there is no asset. February month you are using for 19 days. Simply take this 19 days, multiply this with per day depreciation. In February month your depreciation will be 520.5. Similarly, for March, 31 days multiplied by per day this much. Right, once you put a formula like this, it will be easy for you to calculate. Now which one is fixed here? Per day depreciation is fixed, correct? This is fixed. So what I am going to put, I am going to make this as constant. Now when I copy paste this here, automatically it will take this with this. So I am going to copy paste it. Okay, if I look at December, if I just do F2 here formula, it is taking 31 into 27.4. If I put this 30 into 27.4, correct? Now what I am going to do, I am going to calculate a depreciation here also. Here I already calculated, I am freezing this number so that the formula will not affect this number. I removed formulas here. I'll put 2 decimals, accounting format 2 decimal. Now when it comes to when it comes to 2022, did we use the asset full year or partial? We've used full year in this year. So it will be 31 days, 28 days and so on. So what I am going to do, I am simply going to put January 31 days multiplied by per day depreciation. Now per day depreciation is fixed. Just go to your this column, put a dollar symbol next to J so that this will become constant. So I'll just copy this, I'll paste it here. Am I doing much calculations here? If I understand how to calculate for 1 month, everything is done. And this is how you are going to do when you are in a project, because you are going to have huge number of assets in your Excel sheet. Not every asset you are going to calculate manually, only for one asset, only for one line you are going to fix the formulas, and then it's all about control C, control V, copy paste, all the asset numbers will get auto calculated. Now I'll copy paste this number also into values. Next one for 2023. In 2023 we have used partially because we have not completed 2023 yet. You do not know what will happen in future. You may sell the asset, you may scrap the asset, anything might happen, so you are not going to compute for the full depreciation. Because depreciation is a P&L impact, you are going to put the depreciation in your P&L on a monthly basis. If you are currently on May month, you would have calculated a depreciation till April. Am I correct? We are on May month. Depreciation is always posted for the month. May month depreciation will be posted on 30th May or on 31st May. May end, you will post the depreciation. Currently, we did not complete the May month. So we will not be posting depreciation until we complete the month. So May month, you are not going to post the depreciation. You are going to post depreciation until April only. So January, you have used asset fully. Select this, take this number of days, multiply with this. I'll put a constant for this depreciation. Okay, and then I am going to copy paste the formula until April. Here I am not going to charge depreciation because we have not reached that month yet. Now if I take the total for 2021, this is my depreciation For 2022, this is my depreciation. For 2023, this is my depreciation. So far the depreciation posted. Depreciation till April 2023 is this plus this plus this. It is your 20,493.15. Okay, this is the depreciation that is posted so far. Now this depreciation is called as, why it is, okay, this depreciation is called as accumulated depreciation. Accumulated depreciation. Okay, this is called as your accumulated depreciation, which is 20,493.15 paisa. This is your accumulated depreciation. Now you need to understand something called net book value. Okay, what is your net book value? Net book value is equal to APC minus accumulated depreciation. What is your net book value? Net book value is nothing but current value of the asset. To find out the current value of asset, you first know what is your APC value. APC is nothing but acquisition and production cost, which is nothing but your purchase cost, purchase price. So we purchased this asset for 1 lakh. So it will be 1 lakh minus accumulated depreciation until April 2023, which is your 20,493.15. If you deduct this minus this, you will get your net book value, 1 lakh minus this. 79,506 is your current value of the asset. Okay, this is your current value of asset. NBV, net book value is 79,506.85. Now these calculations, whatever you are seeing on your Excel sheet, all these calculations are automatically performed by SAP. You don't need to do any of these calculations when you're on SAP. But if your client says, or if you wanted to test, if your client is telling, first point. If your client is not telling anything, the second point. Since you have configured your asset accounting, it is your responsibility to test that it is working fine. When you're testing and when you're confirming that it is working fine, it is not based on I created asset, I did not get any error, asset number got generated, fine. Second one, I purchased asset, I did not get any error, asset purchase document got posted, fine. Third one, I checked the asset explorer or asset values. Your asset values or asset explorer is going to appear similar to like this. Every year it will show you the per year depreciation. Every year it will show you the net book value. Every year it will show you the monthly depreciation like this. It will show you the number. On your SAP system, all the numbers are visible, but you are not going to confirm that it is working fine based on looking at the number. When I pull out an asset report, I am able to see the numbers. I am not supposed to say it is working fine. If I am doing it, my testing is wrong. I do not know how to test. If I am saying by looking at the number it is working fine, my testing is wrong. I am not testing in a proper way. Instead, what I'll have to do, I will have to take a proper scenario. So I must include when I purchased the asset, which means on what date I am capitalizing my asset, what is the rate of depreciation or depreciation method I am considering. Based on that, till date, whatever the depreciation values that system is proposing, are they correct numbers or not? You will have to manually calculate all the numbers and make sure that your manual calculation is matching with SAP calculation. Only if it is matching, you are going to confirm or you are going to showcase this to your client stating this is how your asset accounting is working. Literally, when you are showing these kind of demos to your client is going to take calculator or Excel sheet on their system. They are going to verify all the things that we have done on the Excel sheet now. If anybody who worked on asset accounting will understand what I'm talking about.
Sir, one doubt.
Yes.
Sir, for year depreciation 10,000, but year calculating 9,150, your difference is 850. How to accumulate that amount?
I am coming to that point. Currently, I am talking about this net book value. This point I am coming to this point, that how we are going to validate. That's what I told now, right? If the numbers are coming, we are not supposed to say it is working fine. You have to verify if this number is exactly matching with our manual calculation number.
Yes.
Right? Now, here this is your net book value. And how we arrived at this net book value, you understood, right? You calculated a depreciation for all the years till date. And when you first calculated, your first depreciation calculation was always per year. When we say that it is always per year, what we are going to do is, you are going to calculate depreciation per year based on asset purchase value multiplied by depreciation percentage. After that, per month, in a year, you are going to have 12 months, per year depreciation divided by 12 months. Next one, you have per day. When it is per day, you are, what number I have taken here? How many days I have taken to calculate daily depreciation?
365.
365 I have taken. According to this 365, now look at this number. Whatever I'm highlighting with blue, look at this number. Per year depreciation is 10,000. But is this 10,000? Is this 10,000 or not? It is not 10,000, right? Yes, no? Matching or not matching?
Not matching, sir.
This is not matching. If this is not matching, is this correct or not correct? This is not correct.
Not correct.
Obviously, anybody who looks at this, they will tell, how come your depreciation per year shows 10,000, but you accounted only 9,560, 9,150. Now here you'll have to bring your fiscal year setting into picture. When we are creating fiscal year variant, in your fiscal year variant, are we taking February month 28 days or 29 days? Whenever you create fiscal year variant, are we supposed to take 28 days or 29 days in February? What is the right approach?
29 days will.
29.
You'll have to take 29 days, because if you put 28 days, you will not be able to account on 29th day of February on leap year. Okay, you are going to put maximum number of days in a month. February maximum number of days is 29. If this is not a leap year, you are not going to have 29th day. Even if I put 29 on February, I will not be able to use 29 unless it is a leap year. Am I correct? So what I'll have to do here, I have to take number of days according to your fiscal year variant. In your fiscal year, you have put 366 days here. Okay. Now what I'm going to do, I'm going to revise this calculation. Is equal to 10,000 divided by 366. Now per day depreciation has been changed. Correct? Now I am going to put these calculations again for 2022. This is 2022 in bracket 365 days. This is 2022 in bracket 366 days. Okay, I am going to take this 31 multiplied by this now. Now this is a fixed number. I'll make this as a constant value. 846. Now I'll paste everywhere. Copy values. I'll make it 2-digit decimal. Now I'll do a total. Is this matching now? Sorry. Is this matching or not matching?
Sir, the February month, we should take it 29 now.
February month, you'll have to take how many days? 29 days. Sorry, I have removed the formula is equal to 29 multiplied by this. Copy, paste a special value. Now, is this matching exactly?
Correct, sir.
Yes, sir.
Is this matching now?
Yes, sir.
Now, minute, small points, if you are not understanding the logics, will not work out, and we will never be able to realize that, okay, this is where I am committing a mistake. And you never know from what angle, from what point your errors are coming, issues are raised by your client or your business or by the auditors. So when they raise any point that these calculations are not correct, amounts are not matching, they will not allow your financials to be closed until you rectify the number. You are not supposed to overstate your asset values. You are not supposed to understate your asset values. It has to be exactly the same figure as per your accounting standards or your accounting principle. For these things to happen, you will have to do different things. For example, my depreciation is like this, but for some reason I have posted only 9,150 depreciation. Now I have charged less depreciation, which means I am overstating my asset value. Correct? I charged less depreciation, which means I am overstating my asset value. Now your financials are showing more number in your balance sheet, less number in your P&L. You'll have to adjust this. For this, you need to perform different scenarios in asset accounting called asset revaluations. You'll have to revalue the asset. You'll have to decrease the further amount from this asset. Whatever the amount you are not able to reduce, you'll have to reduce it further. So you'll have different scenarios to treat various requirements, various business processes. But all these are purely dependent on your basic calculations on asset. If you are able to understand these basic calculations, it will be easy for you to do asset accounting. Okay, tomorrow on your resume, you can highlight that you have extensively worked on asset accounting. And this comes only when you practically understand in a logical way. Otherwise, we will end up remembering only the transaction code, the path, menu path, the T codes for the asset accounting. But that is not something which people are expecting from you. Talk in a different way, try to explain these points in your interview, see why you will get rejected, see why you will get the different questions, and you are telling the different points in your interview, which means you are making the interviewer to ask points or to ask questions from what you are talking. Take interview in your control by talking right things. If you are not talking right things in your interview, you will be under the interviewer control. You will not understand what he is asking and what to answer, you will be blank. If you are telling me something like this, per day it will be like this, per month it will be like this, so many things like this, he has no other option. He will put why like this, why not like this, are you sure that it will work like this? It becomes an interaction. So convert your interview into an interaction. It all depends on what you're talking and how you're explaining, how you're convincing. On any topic, if you take, make sure first you understand the process. only after understanding the basic business process get into SAP, because we are expected to showcase your business process knowledge, your business process understanding on your interview. Right, I am repeatedly telling you this point. Make sure your focus is on that area, not on system configurations. Getting my point, right? Any doubt on these calculations?
Sir, one doubt.
Yes.
Sir, in the month of February, we have charged the depreciation for 29 days, but in the financial year 2022, there are 28 days. Aren't we charging 1 day extra depreciation?
It is based on your fiscal year variant. According to our fiscal year variant, system is going to consider 29 days for February month.
Okay.
Okay, if you are calculating depreciation based on per day, according to your fiscal year, you have put 29 days for February.
Yes.
So considering that, if you count number of days in a year, according to fiscal year, not calendar year, because this calculation is performed based on the fiscal year.
Yes, sir.
Based on your fiscal year, it has got 366 as count. Now here the point is, you will have to verify this 10,000 is matching with this 10,000, because depreciation is always calculated on yearly basis. If I am talking about 10% depreciation, what I am going to do, I am going to check my asset value multiplied by 10%, 10,000. I am going to look at for a year, is this 10,000 or not? Is this 10,000 matching with this 10,000?
Yes, sir.
Right? These 2 points is what you have to compare, and on a monthly basis, how we are going to charge the depreciation is not going to be considered, because it's all the same amount. You're not overstating the depreciation, you're not understating the depreciation. It's just a monthly adjustment, that too because of your fiscal year variant. 366 days is coming. People might ask you this question in your interview: why 366 instead of 365? You have to be confident enough to bring the point of a fiscal year variant into the picture.
Okay, sir.
Okay. Any
Yes.
other doubts on this? This is your first point to learn asset accounting in SAP. If you want to learn asset accounting properly, this is your first point. This is the first step. If you are clear with this, you understood 50% of asset accounting in SAP without logging into SAP. Whoever understood this has understood 50% of asset accounting in SAP. Whatever is left is only 50%. You already understood half of the asset accounting with this table. Right? Now, what I want everybody to do is, when I share this Excel sheet, take similar example, change the numbers. You change the purchase date, purchase year, change the value. I took round figure, you take 2,45,245, some round figure. Instead of a round figure, take an odd number and take different dates. Check if you are able to compute or calculate all the numbers without getting confused. First, to understand it, take a round figure. Once you understand it, compute the same asset with odd number. First point. Once you understand this, now this calculation we have done considering fiscal year Jan to December. Now for the same asset, if your fiscal year is April to March, what will be the figure in 2021? What will be the figure in 22? What will be the figure in 23? Everybody is aware that we are going to use two accounting principles for our company code: leading ledger, non-leading ledger, Indian Companies Act, IFRS. Correct? According to IFRS, we are going to use Jan to December. According to January to December, these are your depreciation figures. According to April to March, according to Indian Companies Act, this is not the number. Indian Companies Act is starting from April. In 2021, I am going to start a depreciation from where? From 2021 or from 2020?
2020.
Now look at this table. Okay, this is one point. And same thing if I say like fiscal year is April to March. I'm not going to calculate the numbers, I'm only going to put this. So this will remain as it is. According to April to March, your purchase year, which is, what is it? Feb 10, 2021 is part of which fiscal year according to this? February 2021 is part of fiscal year 2021 or 2020?
2020.
2020.
2020.
2020, 2021, 2022, 2023. Now you are getting 1 year extra all of a sudden. Correct? You're getting 1 year additional? Yes, no? Same asset, same asset, same purchase date, same key date, depreciation till today. One side you are getting 3 years, on the other side you are getting 4 years. Correct? Everybody understood why 4 years here? Why 3 years on the left side? Why 4 years on the right side for the same asset?
Yes, sir.
Yes.
Now it is slowly turning into a confusing part, tricky part. Right? Unless you know the logics, unless you know the proper fundamentals, very difficult to understand these points. This is how exactly you are going to work when you are in a project. Okay, this is the exact case scenario you are going to see in any project that you work in real environment. If you are not understanding the logics, if you are getting confused, it is very, very difficult for us to proceed or to manage the things in a project. Because you cannot ask anybody why 3 years here, why 4 years here. If you ask these questions, it sounds like very basic fundamentals we are asking. So certain questions we are not supposed to ask. This is one of those. If you are telling that you are aware of asset accounting, this is something that you must be aware of. For this calculation, try to do it, and this calculation we will fill up in the tomorrow's session. If we do it now, it will lead to unnecessary confusion, which we do not want. First, pay focus on Jan to December alone, according to IFRS accounting principle. Once you are clear with this calculation, you have made your own calculation for at least two assets. One with round figure like 1 lakh 10%, the other one with odd number, maybe 2 lakh 45,000 or 1 lakh 80,000, any odd number you take instead of a round figure. Take depreciation instead of 10, 12%, 15%, 20% like that. Okay, put that and make sure you save the Excel sheet, whatever you are doing. After that, for the same asset, you are going to calculate according to April to March also. And then you'll have to keep two numbers in your Excel sheet. When we configure asset accounting, we are going to create the same asset on the same date for the same value. When we do the asset accounting, we are going to create the same asset on the same date for the same value. We are going to verify the numbers from SAP to ensure exactly the same number including decimal you are getting from SAP. If it is 846.99 on your SAP, it has to be 846.99. If it is 819.67 on your SAP, it has to be 819.67. We are not going SAP to Excel, we are going Excel to SAP. Whatever you calculate manually, the same number you are going to post in SAP, you are going to check SAP if SAP is working fine or not. If you want to check SAP, first of all, you should know what is correct, right? So focus on this area. Clear, right? What to do, what to practice. All right, let me stop this recording.